Well, hello, traders and investors. My name is Roger Scott. Today is Tuesday, September 22nd. We're very, very quickly approaching the end of September. And I've talked to several people. It seems like there's like a black hole between March and August. It's like people just don't remember what they've been doing. I guess it's because the world changed so much in such a short time. But we are here. The market is still semi-stable. I've got a lot to talk about, including giving you two defensive short-term pullbacks that I think will do good over the next couple of weeks, especially if the market stops moving lower. Hopefully, we're near the low or hopefully approaching the low, but I've got a couple of signals that I want to share with you today after I go through the global report. So, as I always say, let's get into it right now. So, European shares bounced back Tuesday, while Asian benchmark extended their slide. Markets are all over the place. U.S.-China tension and COVID-19 concerns have cast a shadow after months of gains that have taken shares to new record highs after the meltdown seen during the spring. Stocks of some big banks fell after a report alleged that several are profiting from illicit dealings with criminal networks. Ouch. The report also helped drive a massive sell-off across global markets on Monday, and its impact was still reverberating Tuesday in Asia. And this is interesting. The report by the International Consortium of Investigative Journalists, fancy schmancy, I like that, International Consortium of Investigative Journalists, I got to remember that. That sounds very important. Said leaked government documents showed that the banks, including JP Morgan, HSBC, I told you guys 3 weeks ago or about a month ago to sell HSBC, Standard Chartered Bank, Deutsche Bank, and Bank of New York Mellon, continued moving illicit funds even after being warned of potential criminal prosecutions. Wow, that's bad. Keep your eye on that. But we're hearing more about that today, and I'm still bearish on HSBC, just as I was a month ago. Airline shares also declined Tuesday on concerns that a resurgence of travel restrictions related to the pandemic may further damage the travel sector. Oh man, and I mean these stocks are not doing well to begin with. Investors are also worried that stocks have gotten too expensive at a time when COVID-19 counts are still worsening. Congress is unable to deliver more aid for the economy, which is terrible right now because we really need it. U.S.-China tensions are rising, and contentious U.S. elections is approaching. I mean, talk about uncertainty in the markets, right? The likelihood that Congress may soon deliver more aid after weeks of unemployment benefits and other stimulus expired has been diminishing, which has been putting pressure on the market. And to add insult to injury, crude oil is again below $40 a barrel, which is the price U.S. frackers pay between $41 and $42 a barrel, so they can start processing the oil. So when it's below $39 a barrel, they can't even buy it without losing money. Forget about selling it at a profit. So things are bad. As far as economic data, we've got a big week. We've got existing home sales today, and we've been growing phenomenal. Look at this, enormous recovery, 20% in June, 24% in July. And now the consensus is between 5.55.5 million and 6.44 million. Anything above 6 would be good, but the truth is we've been month over month 24%, year over year 8.7%. We're already doing better than we were doing before COVID, and I think one of the reasons for that is because a lot of people are taking their money with these low rates, taking money out of their existing homes and using that money or buying new homes or refinancing their homes, and that's why the existing home sales and new home sales numbers have been off the chart. And those are two big reports that I'm looking for. The first one, existing home sales, comes out today. New home sales comes out on Thursday. And between that, we've got manufacturing index, we've got a couple of other things, and we've got Jerome Powell talking. But I don't really see the Fed doing too much right now. Now, that's as far as the news is concerned. Now, I went to my stock fetcher code this morning, and I wanted to find some short opportunities for you. And when I did that, I wanted you to see something interesting. Look at all the shorts we've got. Pro shares, this is a short SPY. Dow, the dog, these are all short signals. daily S&P bear. So if the S&P, the Dow, and the short S&P, the leveraged S&P, and the Dow are all giving us short entry signals, that means the market may be setting itself up for a short-term reversal or a bounce to the upside. So I want to look at a couple of stocks that have been out of favor, all right? And I'm going to give you the entry for these stocks. So if the stay-at-home environment is losing favor and if we're going back to work, then Starbucks should be going higher, right? So we have a pullback, and this pullback is still trading above the 50-day moving average. One of the biggest reasons why I like this stock, and I'll explain to you why. You see this trend line? It's been making new highs before pulling back, and it's still trading above the 50-day moving average. I would not buy the stock at this level. I would wait for the stock to trade at 84, at the 84.50. I would even wait for it to trade at 84.75 level. How about 84.70? If it doesn't go up to 84.70, 84.75, not really that interested. And a stop, I would put a sell stop if you get hit on it. I would put a sell stop right at the 81 level. 81.10, 81, just a little bit below this low. So we would be going long right at 84.75, around 84.70, right around this level here, right before 85. And then we would liquidate it if it breaks this bar right here and goes to about 81.20 level. So that's a stock if, let's say, we get aid right now, or let's say we get more confirmation that a vaccine's coming out, Starbucks is going to be rallying. And again, one of the biggest reasons why I like this stock is because it just recently made a new high before cooling off. Most stocks did not make a new high. Most stocks made a previous high with this recent high lower. I'll show you in a minute. But this stock didn't. It actually made a new high before pulling off with the rest of the market, which means it was ready to go higher before the market pulled back. And that's really important for me right now. So again, higher high, pulled back, reversal, closed, pulled back, broke the 10-day low, and then closed in the upper 20% of the range. And we want to buy it in the upper 84 level and liquidate it at the lower or mid 81 level. So that's Starbucks. Now, let's say that the COVID environment does not improve. Let's say that people are going to be going back to the stay-at-home environment. The COVID-19 vaccine is not going to come out. What's a really good defensive stock? This is a good offensive stock. Starbucks is a good offensive stock. If things start getting better, if we get a vaccine, do you have any idea how much Starbucks will increase in value? Because people are going to be able to go out again, shop at Starbucks, right? Vaccine, going out, Starbucks, living their life, drinking coffee, buying Starbucks. If not, what's the opposite of Starbucks? Philip Morris. People will start smoking. Instead of drinking, they'll start smoking cigarettes. And that's if the vaccine makes a big comeback, if we start seeing more people getting sick and so forth and so forth. And again, why do I like this stock? Well, it's defensive. It broke the 50-day moving average, and now it's coming back above the 50-day moving average. And again, let me show you something. Oops. Look at the trend line. It didn't peak out here. It peaked out right before moving out, which means the stock was ready to go higher. Very few stocks were ready to go higher before this this correction, this pull down. So again, it broke the 50-day moving average, which is fine. It closed right at the high, and now it's ready to pop out. Now, what I would do is I would wait for it to trade near the 79-ish level, 79.30, 79.40, around the mid 79s. And if it breaks below the 76 level, I'm out. So again, I would be buying around 79, mid 79s, and if it breaks 76, I am out. Now let me show you what I'm talking about by most stocks making highs previously. So let's go to our 90-10 and you'll see what I'm talking about. I'll show you what I'm talking about. You see, here we go. Let's see. See the communication sector? It made a previous high, and then this previous high, it could barely get it up. Let me show you some other ones. That's Starbucks. See the last high? It made a higher high. Couldn't do it here. Schwab barely, just by barely. I mean, like same levels. Retail sector, see, lower highs. It made a previous high on September 2nd. See, this is all September 2nd, but then it faltered. And again, I want to just show you a couple of stocks so you'll see what I'm talking about. This is a perfect example. So here's the first high, and then you see consumer discretionary. The second high couldn't break. It was already going lower. Here's S&P again. These are various S&P stocks. Again, second high couldn't go higher. This one did, but again, by a very small amount. HCA, almost the same high as the first high. Notice, again, see, Fidelity National, first high, the one on September 2nd, went high, but the second high, lower. Again, Vanguard. See, I can't find stocks. NTNX, lower. Webb's Canada, lower. Do you see what I'm trying to say? This is a good one. UHS, again, higher high. I like this one. I don't even know why I missed that one, but that's another good one. UHS, you would buy right above. I see why. The stop loss is kind of too much. But again, you can buy this one right at the 109.70 and liquidate it at the $99 level. That's another good one. See, highest high before pulling back. That's what I'm looking for. This is another one, XPO, but it's a tech stock, hard tech stock. Not sure if I want to get tech. And again, stop loss here is about 5 points. This range is high. Monster Beverage, see, lower high. The second high didn't take out this high. CERN, lower high. ITOT, lower high. Vanguard, lower to high. I wanted to find stocks that are making higher high. Constellation brand I like, and it's retail. But again, look at the stop loss. The high here is 185, and here it's it's like a $7 stop loss. So there was a reason why I didn't pick. There was a few others, but again, I wanted to find ones. Look at this. Makes a highest high in August and then sells off. JB Hunt, transports. Even Goldman Sachs active beta didn't do well. Lower high. Checkpoint, lower high. SCCO, lower high. You see that? We had 101 reversals, which is a positive sign for the market, but again, lower highs, and I wanted stocks that are making higher highs. Most stocks made a high around the 2nd of September. That's it. That's right here. But I wanted to see a high around the 16th. Let's see here. Yep, the 3rd and the 2nd. That's when most stocks peaked, but I wanted to see a stock stronger. I wanted to see something peak out sooner, closer to where we are now. And that's what I liked about Philip Morris and Starbucks. And there's a couple of more, but again, the reason why I didn't like them because the bar was too wide. That means the stop would have been too big. So again, I like these stocks. I would take a profit that's equal to 2 times your risk. So again, your entry's about mid 84s. Your exit's about 81 something on the Starbucks. Philip Morris, your entry's right around 79.5, and your exit's 76.5. You're only having about three points risk, so your profit is double that. Just take your risk and double it and add it to your entry, and that's your profit target. But again, if you're going to go long right now, find stocks that had the highest high, not on the 2nd of September, but closer to the 16th of September. See that? 16th of September. Let's see here. Let's see. 14th of September. Close enough. The bottom line is before this last pullback, we want to see stocks making new highs, or at least higher highs than the previous high, not the other way around like you saw here with the majority of these stocks. I just gave you some really good insight, but I've got something really, really big for you, and I'm really excited about this. Today is the day. It's the big day. It's the day we've all been waiting for. The trophy trader himself is sitting at Wealth Press home office in Jacksonville, Florida right now, probably having his morning coffee. I'm about to head out there. This guy has already made over $1 million from this year's trading alone, all documented. We got transaction, trade records. We got more proof than I've ever seen before. It's like forensic accounting here. And today, he's going to show you his exact trophy trade setup at 1 p.m. Eastern Time. It's all happening 1 p.m. Eastern Time. If it's anything like his last trade, you could pocket $16,020 in a matter of days. So grab your phone now, go to the alarm app, and set a timer to alert you to a noon Eastern today. So you have plenty of time to log into the event. It's happening at 1 p.m. Eastern. Log in early. We may get a full room. This is going to be the hottest event ever. We've had the most registrants ever. Folks, you cannot afford to miss this. When I saw these statements, these account statements, and these transaction records, I almost fell off my chair, and I have a high chair, so it's a long way down at work. Don't forget to click on the link below to reserve your spot on Zoom now. Also, update your Zoom. Make sure it's updated. Folks, you don't want to miss out on this. His last trade made him $16,000. He's got a 97% success rate. And the best part, it's all documented. Click on the link below, reserve your spot now, and update your Zoom. I'll talk to you soon. Have a great day, and I'll see you all at 1 p.m. Eastern Time today. Do not miss out. This is going to be the best class ever. Bye.